it's a good idea we get started now. Welcome to this workshop, as we call it. It's a meeting on the Green Goods Initiative, we have called it. And as we have seen, we're talking about stepping a stone towards effective climate change action. I see that already on the screen, we're looking at Michael Livres, who is going to be our first speaker. But let me just very briefly, before I turn to Michael, which for time reasons we have to be very precise about how we get started. Just give you a very brief introduction of what we're doing here. So first of all, I'd like to congratulate the 14 countries that this morning launched the environmental goods agreement negotiations. Hello, can you hear me there? So I said to start with, to thank the 14 countries that this morning launched the environmental goods agreement negotiations here at the WTO. For background, these countries include Australia, Canada, China, Costa Rica, the European Union, Hong Kong, Japan, Korea, New Zealand, Norway, Singapore, Switzerland, Chinese Taipei, and the United States of America. The launch of these environmental goods negotiations towards an environmental goods agreement, it's a good happening. It's a step forward in what has been a long journey to promote the contribution of trade to public policy goals on the environment. At ICTSD, we have been convinced for many years, and we've been working on this file for probably no less than 15 years, that trade and trade liberalization should contribute again to broad public policy goals on the environment. Just sort of fast forwarding to the past few years, we have been concerned about the incidence that energy supply has on global emissions and climate change. And we have found that robust markets in the field of clean energy technologies particularly could have a great contribution to addressing climate change. So that's the focus that we would like to give to this meeting, even though we will be talking about environmental goods in a broader perspective. Again, as a background there, back in 2010, with Michael Livres and other people at the international level, we accompanied an initiative of the World Economic Forum that we took to the G20 to promote what was then called a Sustainable Energy Free Trade Agreement. And that's why I'm very happy that we have Michael with us this morning, because he was actually the brain behind that idea. Since then, we have been working with a number of countries in various forms and various tracks to see that again, we have a better understanding of how trade in environmental goods happens today. So in the globalized economy of today, technologies that are necessary to address environmental issues are really only deployed if markets, international markets, sustain the kind of production networks and the kind of complex contracts that involve goods, services, intellectual property, and investment that will deliver those technologies where they're needed. That's a fact. Many countries around the world, from the work that we have been doing, participate in the production of and manufacturing of some of these components of the services, as well as more and more in technological innovation related to all these goods and technologies. And so it's really a global operation. It's sort of a made in the world type of industry. The way we look at this from an ICTSD perspective is not about the mercantilist interest in a sectoral area of industrial goods or services or agriculture. Is rather, again, from that environmental perspective and the need that we have to make sure that trade frameworks are harnessed to serve, again, those public policy objectives. So in 2011, at the invitation of the Prime Minister of Denmark, ICTSD, together with the Global Green Growth Institute in Korea and the Peterson Institute for International Economics in Washington, launched an idea that we call the Sustainable Energy Trade Agreement and the Sustainable Energy Trade Initiative at the Global Green Growth Forum. And since then, we have been working with the support of many countries, particularly the sponsorship of several countries, both developed and developing, to try to entice, again, governments into action in this area. We were very happy to see in Davos that action that had been prompted in the APEC in 2012, if that is, yes, around a list of 54 environmental goods, was then catalyzed by President Obama's Climate Action Plan, and came together with the efforts that other countries have been doing in the context of the Doha round of negotiations here in environmental goods. And we saw the launch in Davos of talks towards the negotiations that have now been initiated today here in Geneva. So it's taken a number of steps and years to get there, and that's why we're really very happy to see that this is now closer and closer to a real contribution to, again, addressing critical problems at the global level. The hope that we have is that talks in the format that has been proposed and launched today will be expedited enough that we could have results that contribute to the climate change conferences, hopefully already in Lima this year, and next year definitely in Paris in 2015. That would be a wonderful contribution from the WTO and from the trade community. Both in the energy community that is looking at energy security and energy access, as well as the question of mitigation of greenhouse gases in energy supply, as well as in the climate change and environmental communities at the domestic level in many countries around the world, but also at the global level, there's very high expectation on these talks. And so, again, it's now up to the countries that have launched this proposal to persuade those that haven't joined the initiative to join them, so that this can become really, again, a transformational development that again, from the trade side, could be offered in our common purpose to move towards a low-carbon economy and a greener economy at the global level. I'll stop for the moment here so that we can turn to Michael and say good morning, Michael. I hope that you can hear from there. For logistical reasons, you have Michael Luber's CV with you. What we have asked Michael to do is to speak to us about energy markets and prospects. And nobody really in the world has better information and really is feeling the pulse on what happens in those markets with respect to investment, trade flows, innovation than marketplace. So I'll turn the floor to you. I see that from the cameras that we are using here, you can't see the room, but there are many people in the room that you see there. And we see that you're very low on that side. Right? So welcome, and you have the floor. Take it from there when you finish.
Thank you very much, Ricardo. Just as before, I'm not sure how you're going to see the presentation, whether it's going to go up on that big screen. So as we do that, let me just say that I am to begin this opportunity to address you. I am sorry that I couldn't be in Geneva with you, but Ricardo, as you said, for logistical reasons. You were also very kind to call me the brains behind the sector idea. I think there were a lot of people thinking along similar lines, and I perhaps had different sets of data and so a different perspective on the potential role that liberalising trade in this sector could play. And I'll talk a little bit about that at the end of my presentation. So what I could do, just for those of you who don't know the background, my background, I run a piece of Bloomberg, the company. I founded it. We have now 200 people. And we collect and disseminate information on renewable energy, energy efficiency, electric vehicles, and so on. I founded the company and sold it to Bloomberg, and I'm involved as chairman of the advisory board. And what I could do is talk about some of the financing flows and some of the trends in what I call the clean energy industry, although it's a very fuzzy definition. What you see here is investment in renewable energy, energy efficiency, electric vehicles, carbon capture and storage, although there's very little. It doesn't include some of the other sectors which are really important in the future of the energy industry as it decarbonizes, so nuclear, natural gas, and even large-scale hydro, for historical reasons not in this data set, although it would be of great importance. But what you can see here is a very good snapshot, so you get a sense of the timeline, of the time series of investment. If you go back 10 years, 2004, when I founded Finances, it then was, there was about 50 billion, just over 50 billion invested in renewable energy, energy efficiency. There was almost nothing in electric vehicles or power storage at that time. And what we then saw is this surge of investment up to a peak in 2011 of nearly $1/3 of $1 trillion. And so one of the things I hope you take away from this today is some idea of the scale of what has been achieved, but also what needs to be achieved in order to move the needle on emissions of carbon dioxide and other greenhouse gases from the energy sector. 318 billion there in 2011. To put it in perspective, there's somewhere between $1.5 trillion, 2 trillion invested every year in the energy sector. It depends on the definitions of the energy sector. But what we're talking about is something around, perhaps think of it as 10, 15% of investment in energy is already going to these clean sources. And if you look at investment on the generating side of the electrical system, it's already more than 50%. But of course there's investment elsewhere in the energy system in oil and gas, upstream, downstream, midstream, etc., which still is much more substantial than this. But the other way to look at it is, what would this number need to be in order to see emissions peak and then ultimately come down? And that would be something like 3 times the $250 billion, $300 billion figure. If you could get somewhere around 3, maybe 4 times that number, then definitely we will see a peak and then ultimately past the peak, a reduction in emissions from energy. Now, last year was the first year that we saw not just investment dropping, as we saw in the last slide, also actual gigawatts installed. So this here is the installation of renewable energy. These are just the generating side of the electrical system. You can see that the trend was always upwards until 2012, where it peaked and then came down. And so there's a lot of commentary in the press about whether the clean energy is going to repeat the 1980s, it's going to go away because it's variable and it doesn't work, and so on and so on. A lot of pressure on the sector. And I'm going to argue here today that that's not what's happening. What's actually happening is that there's been a few years of consolidation, but that actually the clean energy sector is in very robust, good health. If you look, we also publish here a stock market index. It's called the MEX. Of course, you can find it on the Bloomberg terminal. You can also find it on the internet, on Yahoo Finance and so on. So you can track the valuation of clean energy companies. And here you can see, if you go back to 2011, that's the performance of the MEX. That is the performance of the major stock market indexes, the Nasdaq, the S&P. So a very difficult few years as the clean energy industry has underperformed the major market indices. And of course, consolidation. We have seen companies going out of business, particularly in the solar sector. In the wind sector, not so much companies going out of business, but companies restructuring, shutting assembly plants, and having to really bear on their cost base. At the heart of the drop in investment in the last few years has been Europe. Now, Europe was, of course, the first region where we saw large-scale investment in renewable energy. So you can see that in 2004, even riding through the first financial crisis, 2008, 2009, because there were these green stimulus programs and so on, so we really didn't see investment dropping substantially until the second round of the financial fiscal crisis, Southern Europe particularly, 2011, you see it turning around and investment has been dropping. North America, investment has been on again, off again. Asia, it's been consistently growing until just recently it's flattened off as China has rebalanced its economy towards more consumption and less capital investment. But those have been really minor trends compared to what has happened here in Europe. And at the heart of the problem is policy uncertainty. And when I say policy, mainly I mean energy policy, but also, of course, trade as well. Here on this chart, you can see countries which have retroactively changed the treatment of the clean energy industry, Spain, Greece, Romania, and so on. But also, Europe is engaged in almost permanent policy reviews around clean energy, which, of course, the investors are very destabilizing. Investors hate uncertainty. They hate the idea that they will work on a project that the worst, of course, is when a project is signed, sealed, and delivered, and then the policy changes to undermine the economics of that policy. That is truly disastrous. But also, the uncertainty of working on a project towards an energy market structure which may not be there when that policy comes to fruition. So this has really undermined the investability of the sector in Europe and accounts for that decrease that we saw. Now, I said that I'm going to argue that there is a tipping point, that there is actually, after those difficult years of consolidation, we're now seeing the clean energy sector move forward. This is that same index. If you just look from January 2013, then you see it outperforming the S&P and other indices. In fact, in 2013, this MEX index moved ahead by more than 50%. What we saw was the public markets open for clean energy companies. There's, of course, Tesla, quite clearly the most exciting, not just a car company launch, because those really almost never happen, but the most exciting development in the automotive industry for decades has been with Tesla. There's also the Nest thermostat, a software analysis company called O-Power. It's clear that the public markets are open for clean energy technologies. But actually also on the project side, in the energy markets, we saw this, which is the gigawatt build-out. What we are expecting is actually a return to growth in installations. And when I say expecting, this is based to a large extent on projects that we know about in our databases. This is kind of what we do, is we track projects. So we know that there are projects financed that will be built in 2014 and 2015. So this is not some model outcome, this is reliable stuff. And so we're going to see a return to growth in build-out. And clearly one of the factors driving this is that the same dollar now, and in 2015, will buy a lot more gigawatts than that dollar would have bought in 2011, even 2012. Here we've got an experience curve. In fact, two experience curves. One is crystalline solar, one is thin film. And what you can see is very consistent reductions in costs. Okay? Now, those are masked by prices, which are different than costs, because, of course, what we saw in 2004, enormous amounts of new market stimulation programs, the German feed-in tariff, followed by Spain, followed by Italy, a million solar roofs in California, etc., and the supply chain couldn't keep up, so we saw the experience curve going flat, 2004 to 2008. But ultimately, the experience curve drives the cost of solar down. 99% reduction since 1976, 80% reduction in the last 4 or 5 years, and that will continue not at the same rate over time, but the same rate over cumulative experience building up in the industry. Where has that left us? Here, maybe just...
Can you hear us?
Yes, I can.
We have a problem with your slide, so we have been trying to follow what you're saying, but I know that on your side they post the slides again, okay? So we can continue to speak, but assume that we're not watching this.
I'll clarify what you're seeing. Okay. I apologize for that if it's a fault at our end. So what you've got here is, as the experience curve has driven down the costs of clean energies, what we're seeing that they are becoming broadly competitive with fossil fuels. Not all of them, not in every location, but we are seeing clean energy more and more competitive. And in fact, if you take the lowest costs that we've seen, those are as low as $80 per megawatt hour for solar, 8 US cents per kilowatt hour. To put that in perspective, that is essentially the same as new coal or new gas in many parts of the world. If you look at wind, the lowest cost that we've seen for wind, $37 per megawatt hour, 3.7 US cents per kilowatt hour. That is actually the lowest cost for electricity of any technology that you currently choose to build. So a wind farm in the right policy environment with good wind resource in a grid system that can take that energy and use all of it is actually the cheapest form of electricity available anywhere in the world, which of course is an enormous difference from 5 years ago. Well, just to be clear, that doesn't mean that all renewable energy is cheaper than all fossil fuels. We're going to have a mixed system for a very, very long time. But it does mean that we're in a different regime than we were 5 or certainly 10 years ago. Now, what that is doing is around the world, what we see is countries, large scale. So one second, I'm just talking through. Okay, it's fine. So what we see around the world is that renewable energy is now being implemented at a large scale. When I say at a large scale, what you can't see here, but we'll get the charts afterwards, is a schematic of the German Energiewende, the shift to clean energy, where you can see renewables' share of electricity growing. And I think the figures for the first half of 2014 show that over 30% of German electricity was produced by renewable energy. So over 30%. And this is Europe's largest economy. This is not a small country or a region within a country. This is Europe's largest economy. In Texas, more than 10% is coming from wind. In Spain, figures over 40% of electricity. Denmark, of course, very high. We're seeing very large-scale use of renewable energy. Again, a lot different from 5 years ago. China, of course, has taken up the top position as investor in clean energy, and initially that was because I believe it was an investment in export industries, particularly around solar. Wind was used as a mainstream source of energy in China, but last year China invested in over 11 gigawatts of solar, using it genuinely for its own energy system. And some of that is driven, of course, by the pollution problems in cities. And that is one of the top priorities of the new Premier Li Keqiang. What we're seeing is, whilst the world thinks that China is installing 2 coal-fired power stations every week, in fact, that is what was happening in 2006, 2007. The net new coal installations are now coming down, and what we forecast is that sometime between 2020 and 2030, China will start net dismantling its coal generation fleet. So that even last year, 68% of new Chinese generating capacity was renewable, and before 2030, it would be net dismantling its coal fleet. So that process it already has with inefficient coal generating capacity. Over in America, one of the smartest investors in the world, Warren Buffett, has put more than $15 billion into renewable energy. He's built one of the largest portfolios of renewable energy in the US, if not in the world. And in his words, we are going to keep doing that as far as the eye can see. Because what Warren Buffett has noticed is that through all of these difficult years of consolidation, on the generating side, renewable energy works, and as long as there is good, stable energy policy, it works profitably. These are high-yielding, good assets. Also on the investment scene, good news is coming out of a new market, a new financing market called green bonds. And this is something that we've all waited for within the sector. We've expected, because the big financing capacity is in the international bond markets, and yet renewable energy was not financed through those bond markets. And that has been a topic of huge discussion and debate. There were signs of progress before the financial crisis that then sort of didn't go anywhere. But now 2013, we saw $14 billion of green bonds. In 2014, in the first half already, more than $20 billion of green bonds. We think probably finish the year at around $50 billion. And this is cheap debt in a form which can easily be held by insurance companies, pension funds, and sovereign investors, and the proceeds go to fund a variety of sustainable infrastructure, including clean energy. And this is very positive. Summing up on the markets, what we see going forward, we run very substantial energy modeling, similar to IEA, EIA, BP, and others, but I think we are more bullish on the contribution of renewables, largely because we are more bullish on these cost reductions, not just historic, but future. And I would venture that we have more data than anybody in the world on the true cost of generating energy from these sources. So what we're seeing is, as you look forwards, the number of gigawatts added of capacity in fossil and nuclear versus renewables, what we're seeing is at the moment they're about parity. Last year, 87 gigawatts of fossil and nuclear. Last year, 83 gigawatts of renewables. But if you go forward to 2020, we'll see fossil reducing, 64 gigawatts, renewables increasing, driven largely by these cost drops to 155 gigawatts, and then by 2030, just 40 gigawatts of fossil fuel and 260 of renewables. So a very substantial shift on the electric generating side towards renewable energy. Now, just in terms of putting in, so that would suggest everything is good, we're forecasting tremendous progress, what's the problem, how can your negotiations help? What we've got on this chart, if you can see it, and if not, you'll see it afterwards, is an illustration that there is still much progress to be made. The clean energy industry is still very, very young. There are very big cost differences between the example here, solar, small-scale rooftop solar in Germany, which can be installed at $2 per watt, and in California, where it costs nearly $5 a watt. And it's extraordinary if you think about how many other products are 40% of the cost in Germany, but they are in the US. Japan is around $4 a watt, so double Germany. And That's not to say that the differences are all to do with trade. That's just to illustrate that this is an immature young market with a long way to go. If we think about how do costs get driven down, then there are three different parts to it: research and development, scale and logistics, and cost of finance. A lot of the commentary, particularly amongst people who are not in the clean energy sector, even good classical economists, look at what's happening in clean energy. They say clean energy has a cost problem, which we've seen is not as substantial as they probably think. But they then say, and what therefore needs to happen is more research and development. And it's absolutely clear research and development will help to drive down costs. There are breakthroughs in batteries, breakthroughs in solar, breakthroughs in smart grids, all sorts of different parts of the clean energy sector that will help. But it's important to bear in mind that experience curve. The experience curve is also largely about scale and logistics and supply chain. And of course you can see where I'm going with this, because that scale and those efficient supply chains can only work if they are global. Different countries are good at different things. We all know the theory of trade. I'm not going to try and share with this audience, but that particularly can only be done if these supply chains are integrated. And the final piece is incredibly important as well, which is the cost of finance. Clean energy technologies, whether it's energy efficiency, most renewable energies, smart grid, transportation, public transportation even, most of the cost is up front. This is very different from coal, very different from gas, where the costs are largely embedded in the fuel. What that means is that if you want cheap, clean energy, you have to go after low cost of finance. What that means is reducing uncertainty. As soon as the financial system starts putting risk premia, and particularly policy risk premia, or trade tension risk premia, onto each project they're financing, then clean energy loses in competitiveness to the more immediate ways of generating coal, gas, and also I should mention fuel oil, diesel, and all the things that are used in the developing world. So I think that what we're engaged in, what you're engaged in, could not be more important. I'm absolutely delighted to see that process that Ricardo outlined has reached this point where you're gathered in Geneva. I am very sorry I can't be there. I want to support this process in absolutely any way that I can. You will have my slides. If you're unable to see them, then we'll make sure they get to you. And if you have any questions on any of the data, that is exactly what we're here to serve. Thank you very much.
Thank you, Michael. And my apologies are here in the room for the slide, but we will make them all available to all of you that registered or send us an email. I know from experience with Michael before, they're fantastic slides that give you really a very visual, quick image of the argument. But thank you very much for making those points. Michael, these are numbers that are very compelling about the kind of trend that we have right now in the global economy and renewable energy. Let me just add to that last week, in the context of the first environmental assembly, I think is what now they call it, of UNEP, the global meeting of environmental ministers, UNEP launched a report on South trade in renewable energies, co-written by Mahesh Sugatani of ICTSD, and in launching the report, the emphasis was made about how global markets in low carbon energy efficient technologies projected to triple to 2010 and 2020, responding to the commitments and the policies that have been put in place by most developing countries now on renewable energy. But again, it also highlighted not only how that market in South-South is growing very fast, but how it continues to be affected by barriers to trade. So when we have Michael there, let me suggest that we take at least 2 or 3 comments or questions from the audience, if anybody would like to ask anything from Michael at this stage. And I'll just open the floor here. Okay. Yeah. Any of my colleagues on the side like to ask anything? Okay. If not, then we'd like to thank you, Michael, for being with us. We look forward to receiving the slides and distributing to people here. And we'll move on with the meeting. Thank you again for taking that time. Okay, so let me get back to our workshop. Just before going on with other panelists that are with us this morning, just two quick comments on my side. One is that as we see these negotiations launch today among the 14 countries that did so this morning, our hope is that they will not get drowned in the kind of discussions that affected negotiations in the past over 10 years on the Doha round mandate on environmental goods. And my point was to try to emphasize that message that the driver of negotiations at this time on environmental goods should be the need for urgent action. I couldn't sort of overemphasize the urgency to do something on climate with respect to the scale up of renewable energies. So notwithstanding the presentation that Michael just made, the rapid growth of renewable energies is not yet enough to cope with the needs that we have to address emissions in energy supply. And that's a point I want to make. A second point I want to make is that as you heard from the presentation, and as we will hear from our presentations coming up this morning, this is not a sector of the industry. It is the generation of particularly renewable energy technologies. So when you have a renewable energy project, you involve a number of sectors in the industry, as well as services providers in the global, the domestic and the global economy, is small and medium enterprises all over the world, in countries all over the world. So we're talking about really the negotiations that, if they are focused on the reason to act urgently and to give a particular treatment to an objective, then that environmental objective, and particularly at this time, the urgency for action on climate change, again, on the side of energy supply, then we hope that the dynamics of that negotiation will be different. It should also speak to, again, countries that are not yet part of the 14 countries that launched the negotiation, but many of whom are equally committed to those policy objectives and face the same challenges with respect to meeting those policy objectives back at home. So with this, I'm going to turn the chair to Ingrid Jagu, who is the manager of the Global Platform on Climate Trade and Sustainable Energy at ICTSD, and who's the person that has been really driving our work on this area, to take us through the second session in the morning before we break for lunch at 1:15. Ingrid, you got the floor.
Thank you, Ricardo, and good morning, everyone. So after this introduction, which I think really underlined the importance of trade policy for promoting clean energy technologies, I would like to turn quickly first Evan Lewis of the Canadian mission, who has kindly agreed to give us a brief little update about the launch, which took place earlier this morning. I know that many of you were in the room, but not all of us. So we will have a short introduction, and after that we have a panel of 3 experts who will present some findings which are more directly related to trade policy than what we heard in the first presentation. But I think that I'll give the floor first to you, Evan, and then I will introduce the panelists.
Just before you take the floor, Evan, just to let you know, on that website of ICTSD, on the front page, you now find the slides from Michael's presentation this morning.
Well, thanks very much, Ingrid, and thanks for the invitation to speak just very briefly about this morning's press conference. I think I don't need to repeat the substance of what was said. I don't think I could attempt to summarize or repeat the entirety of the comments of the various ambassadors. But we did have a joint statement that was presented this morning that primarily announces that we are launching negotiations of the initiative that we announced several months ago, and there was quite a constructive and positive session of questions and answers following that. I can confirm that the joint statement will be publicly available through several online websites primarily. I assume that'll be soon if it's not already available online. I think it was a very positive and constructive event this morning that I think conveyed the clear commitment of the 14 currently participating WTO members to move forward with this initiative together and in a constructive fashion. I think it clarified the focus at this stage on tariffs and goods, but with a broader hope that this initiative can lead to broader benefits, whether for WTO negotiations more generally or on other subject areas in the future. I'll stop there though, because I hope and assume that many were there for the conversation themselves, and as I say, I wouldn't presume to summarize the various comments of all the ambassadors. Thanks, Ingrid.
Thank you very much, Evan. Is there anyone else among the delegations involved who would like to add anything to what Evan just said? Okay. In that case, I think we will move on to the 3 presentations. We have 3 complementary presentations this morning. First, we will hear from my colleague on my left side, Mahesh Sugatan, and those of you who are involved in this area are probably more than familiar with his name, because he has written a lot of the reports that we have published in ICTSD, and also the report that Ricardo mentioned, published the other day by UNEP. And as we just heard from Evan and earlier this morning, the focus of the green goods negotiations at this point is going to be on goods. And that's why we have asked Mahesh to speak about tariffs in the Green Goods Initiative, ensuring an effective outcome. And an effective outcome from our perspective is one that delivers to climate change. Mahesh is a senior research fellow in ICTSD. And Mahesh, please, the floor is yours.
Thank you. Thank you, Ingrid, and good morning to all of you, and it's good to be here back again at the WTO. And I'd also like to congratulate the G40 members for launching the Environmental Goods Initiative, and hopefully it will get on to a good start and a lot of progress in the months and weeks ahead. What I'll do today in the presentation is basically highlight a few findings coming out of our papers that is right now in process, but it will be finalized in 1 or 2 months. So as soon as it's ready, we'd be happy to send it to all of you. what I'll do today is to look at the 54 goods in the APEC list, look at what is in the list, what is out of the list. The focus will be very much on a renewable energy, clean energy, climate perspective, and the reason for that is we've been, of course, concerned about climate change mitigation and also looking at how trade policy could deliver for climate objectives. So with that perspective, I'm going to highlight, the focus will be on clean energy, but this is not, of course, undermine the importance of the other goods in the list, which we recognize are equally important and also need to, there has to be action on that too. So just to give a context, well, Doha round, just as a starting point, the initiative is outside of the Doha round, but it's always good to have the declaration as a backdrop, what has happened so far. So we have a mandate in paragraph 31.3, consensus, progress has been pretty difficult. There has been a lot of approaches to liberalization that members have put forward, list approach, project, request of approach. So this is just a context on what has happened. But of course, G14 initiative is a fresh start, really building on APEC. So in the Doha round, we saw a number of categories for environmental goods that have been put forward by members: air pollution, renewable energy, wastewater treatment, etc. This slide shows the of products that members have put forward under these lists, so as to kind of keep that in perspective with comparing that with the APEC 54. Now, in the APEC 54 list, we got a number of products which we try to classify under various sectors. Now, these sectors are not mutually exclusive. There's a lot of overlap between the various sectors, but so far we found that 15 products on the list are relevant for renewable energy, 17 products for environmental monitoring and analysis, solid waste, wastewater treatment, and one product which is an environmentally preferred product, which are multi-layered bamboo flooring panels. So these sort of give an idea of what the sectors are, and again, clearly the environmental protection sector is fairly important here. Now, in terms of looking at what goods should be selected, accelerated, prioritized, again, up to members whether to take to approach liberalization at the 6-digit level, or whether they would like to take X-outs or national tariff lines. But a couple of criteria which might be useful to keep in mind while going about the process: specificity. Will those liberalization initiatives be pursued at the 6-digit level or the national tariff line? Uniformity. If members do agree to go with the national tariff line, then is the environmental good in question reflected under the same HS 6-digit subheading by all the economies? Visibility. If the national tariff line approach is followed, is the environmental good reflected in all members' national tariff lines? If not, should a new national tariff line be created? What we found is a lot of products, for example, heliostats, which are classified under instruments, many members, if not all members, don't have a specific national tariff line for that. So there might also be a case for creating some of these new national tariff lines as members move forward in the negotiations. And finally, clarity. Are the descriptions of the environmental good harmonized among all members, or is there at least a common understanding of what is the good that is being referred to in the discussions? So these are just some broad elements that members might want to keep in mind while they go about the negotiations. Now, we looked at some examples of clearly identifiable products at the 6-digit level. What we found is only one subheading, which are wind power generating sets, can be considered to have all national tariff lines or all product categories under which are could be environmental goods. Most of the other goods are a mixed bunch. So there's a lot of environmental goods mixed with non-environmental goods and others. So, and some HS codes have only a very small proportion. So for example, I mentioned heliostats. Heliostats are relevant for concentrated solar power, but at the same time they're classified under optical instruments, which include a lot of microscopes and telescopes and other kinds of instruments. Now this is actually one of the biggest traded categories in the APEC list, but the actual environmental good that is applied constitutes a very small proportion of the category. So these are just to give you an answer. Different groups have different characteristics as far as the environmental end use is concerned. Now, we found that looking at examples of national tariff lines was a good way of breaking down the 54, seeing what kind of national tariff lines exist under these 54. So we looked at the example of the US. So now under the US harmonized tariff schedule, what we found was that there were 250 national tariff lines which reflected these 54 HS subheadings, and US imports under these tariff lines accounted for about $50 billion US. Now, around 50 tariff lines, which represents about $6 billion in imports, included mainly or only non-environmental goods. So these included products like parts of aircraft, gas turbines, non-solar water heaters, flat panel displays, printed circuit assemblies. So these are not, products which clearly don't have an environmental end use. So there are about 50 tariff lines in the US code. There are about 17 tariff lines which cover exclusively or predominantly environmental goods. These include solar PV cells, modules and panels, wind power generating sets, catalytic converters, dust collection and air purification equipment, water purification equipment, etc. And the largest group in the category, as far as the US HTS was concerned, was about provided for both environmental and non-environmental goods. And this category was worth about $34 billion, which is the largest category in terms of trade value. Now, this includes some very well-defined multiple-use goods such as parts of steam turbines, parts of non-aircraft gas turbines, crushing and grinding machines, which clearly have applications in both the environmental and non-environmental use goods sector. Now, obviously, there's been a lot of reference to ITA, the Information Technology Agreement, and how this initiative has parallels with the ITA. So what we did is we also looked at ITA, how many products in the 54 list are already covered under the ITA agreement. And we found that there are about 9 HS codes which G14 members have already bound under the ITA, and this includes, interestingly, solar PV cells and semiconductors, for which the tariffs are actually bound at 0. So that means for these products, G14 members really don't need to take anything, don't need to do anything new because they're already being bound at 0 tariffs. So other instruments like chromatographs, monitoring equipment, etc., all of these are covered. So the trade in this, in the category that is already covered by the ITA was worth about $162 billion in 2011 and 136 in 2012. So this represents more than 20% of all the trade if you take the 54 subheadings fully covered under the HS6. Now, what we did at ICTSD is also to look at renewable energy from a supply chain perspective, because as far as renewable energy is concerned, ideally it makes sense for trade policy to be holistic, to make sure that nothing that is important from the delivery of a renewable energy service is excluded, which means pretty much all, what are the goods that are in there, what goods that are excluded. So what we found is a lot of products are in the list which are important for renewable energy delivery, so solar cells and modules, heliostats under CSP, solar water heaters, electric generating sets. But on the right-hand side, you'll also see a number of products which are important from a supply chain perspective, which are not in the APEC 54. So obviously there's also the option, well, if members are considering to expand the list at some point and they do want to address renewable energy, maybe these could be some products they might wish to consider. So for example, wind power towers, for example, gearboxes, etc. Okay, so one of the important categories here I wanted to mention was hydropower. So there's a lot of hydraulic turbines, wheels, and water wheels that are not included. Now, why this is interesting is that most of the G14 countries are actually net exporters in these products, in the hydraulic sector. So that's really interesting that given their export interests in that category, that this didn't figure in the APEC 54. So the G14 share, for example, in 2012 was about 59%, and the share in small hydraulic turbines alone was about 51%. So hydraulic turbines clearly are a very important category there, which is now left out. Well, finally, we have biofuels, products like biodiesel, and then finally, there are a lot of components and parts. Now, these are obviously what many countries would consider dual-use items. They're used for both environmental as well as non-environmental purposes, but arguably from a supply chain perspective, they're very important to consider. And the interesting thing is a number of developing countries actually show very strong trade performance in these parts and components. So the parts and components are very dynamic in the renewable energy sector, but again, many of them have not been included under the APEC 54. Some have been, for example, static converters, etc. So at ICTSD, we've identified a number of components, and again, recognizing the fact that dual use will remain a problem, what we've also looked at is, well, if there are dual use, are there any among the dual use which are really important for renewable energy delivery, and which of these products could be those where developing countries might also have a very strong export interest. So we looked at some of these criteria as well. Now, looking at the APEC list as a whole, in terms of share of world trade, what we found is we have about, the APEC constitutes about 70, let me see, it's about, looking at including extra trade, it's about 79.1% of imports and about 93% exports. So total trade is about 85.9 or about 86% of world trade. But when we exclude intra-EU trade, we find that the share, the overall share drops somewhat to 83.4. So the interesting thing here again for members to consider is calculation of thresholds. I mean, if thresholds are calculated at some point, what should be taken? Should it be the import figures? Should it be the export figures? Should it be the overall trade figures? Which year? Because it could differ from 2011 to 2012. So that makes a difference. For example, just to give, let's say 90% is taken as the critical mass threshold. What we find is in 2012, going by the gross exports, APEC members, the G14 members have already reached that level. So you're already at 91.7 if you look at gross. But if you look at imports plus exports, then it's a completely different picture. And then looking at trade balance, what we found is also, if you look at trade balance, China, the EU, the US were the sort of largest importers and exporters of products on the APEC list. And Japan, Korea, and the EU especially had a large trade surplus. This is again at the 6-digit level. What we also did was to look at a few other countries which were outside of the G14 initiative. We thought, well, it would be interesting to compare how they stand in terms of the trade in these products, because obviously they're not part of the initiative. But if they were to become part of the initiative, it would be very useful to have a picture. So what we find, for example, is that the largest non-participants in the G14, in terms of the descending order of total trade in these products, are Mexico, India, Malaysia, Thailand, Russia, Brazil, Turkey, Indonesia, Saudi Arabia, and South Africa. Now, the Philippines is also an important trader, but the Philippines did not report trade data under ComTrade. So that's why Philippines has not been included, but the Philippines is also a key player in these products. So again, we find, I mean, in terms of trade balance, most of these countries have a slightly negative trade balance in these products, both 2011 and 12. Now, coming to tariffs. So looking at the tariff profile, what we find is tariffs are fairly low. So should not be a challenge as far as I think we're concerned that G14 members should find it fairly easy to liberalize and to bind tariffs, because tariffs really are not a huge problem. The simple average MFN applied tariff was about 1.65% for all countries. But that does not mean to say that tariffs were not significant for some products. In certain products and for certain countries, you do find a slight peaks in some of these products. So looking at, and the other interesting thing was to look at what part of these imports of the G14 were already duty-free. So what we found was that more than half of the HS subheadings of the G14 members were already duty-free on an MFN basis. So excluding duty-free imports, the simple average is about 4.3%. So in value terms, 56% of all the G14 imports corresponding to the APEC list are duty-free, which means more than half of the imports are already duty-free. So imports into Hong Kong, Singapore, Norway, and Switzerland are already entirely duty-free. Canada, Costa Rica, and Japan are almost entirely duty-free. And the largest importers of dutiable goods in terms of value are China, the EU, and Korea. So these are sort of three members where which have the sort of most tariff lines under duty coverage. What's the situation for the main countries which are outside of the G14? So we looked at a few countries. What we found was the tariff picture varies. The simple average MFN tariff for some of the non-participants in the G14 was about 3.8% for these countries, ranging from 1.1 in South Africa to 11.5 in Brazil. And the MFN applied tariffs in key G14 non-members are more significant. So obviously, the non-participants have overall on higher tariffs for some of these products than the participating members. In particular, Brazil, India, and Indonesia. Simple average MFN applied tariffs in the 10 most important G14 members is 3.8%. However, in many countries, especially Malaysia, Russia, South Africa, and Turkey, the MFN applied tariff is already quite low, and it's very close to the G14 average for these countries. Looking at non-participants again, in terms of total import value, Mexico is the most important non-G14 country. Brazil and India are the most important in terms of value of dutiable imports. But interestingly, in Malaysia and South Africa, over 90% of the imports in the 54 subheadings are already duty-free. So in terms of, this is of course just an idea, in terms of possible easy expansion of membership, most likely Malaysia and South Africa should not have a very big burden to take on if they do want to join the G14 at some stage. Now, tariffs are still important for some products, as I mentioned earlier. A couple of examples are solar water heaters. Many countries maintain fairly high tariffs. For wind powered sets as well, China and Korea have about 8% applied tariffs. Australia and New Zealand apply 5% tariffs for resistance heated furnaces and ovens. The US applies 5.6% for condensers, for steam and other vapor powered units. But obviously, compared to the non-G14 members, they're lower. So, for example, Brazil has 16.5% for static converters, and India applies 8.3%. One of the interesting things that we also looked at was looking at the solar supply chain. We thought of including machines for the manufacture of wafers, because that comes up in the upstream part of the solar supply chain, and that also has fairly higher tariffs in some of these countries. So one of the core questions, of course, we'll be looking at is, does it make sense to prioritize some goods? Obviously, all of the objectives, all environmental objectives are important, but from our perspective, since we said climate change is an issue of global urgency, one of the things that we would like to propose to members is to at least keep climate change at the forefront, although we do recognize that other objectives are important, but also to see which products, at least there are some products in the list in the final outcome that do also, that have a relevance to climate mitigation. And as Ingrid mentioned earlier, ensuring that could also be a great way of the trade policy of the WTO system delivering something in for Paris for the UNFCCC outcome as a deliverable of trade for climate mitigation efforts. A couple of other things that members might also want to look at is trade intensity and dynamism, which products are of interest to developing countries, and extent to which barriers exist for some of these products, including tariffs and NTBs. Living list. What do you do about new products that are being constantly developed? A lot of R&D is going on in a number of products. Can these be automatically captured by the list? In some cases, perhaps yes, because if the new product is automatically comes under a tariff line that has been bound at 0, there's no need perhaps to do another effort for those new products. But for certain other products, if the liberalization is narrow at the national tariff line level, new products that might maybe emerge and are classified under different tariff lines, there might be a need for having a separate effort for those. So for example, third generation biofuels don't have any HS code or tariff line as far as my knowledge goes. So this could be an area where technology is changing fast and maybe new need for new HS codes to come in. Just an example, just a change from all those tables and figures. This is an interesting example of an ATM that is being set up by a company in India. And the ATM provides clean water and it's solar powered. So customers have a card which they swipe, and the cost of 1 liter of water is about 1 Indian rupee, which is, I mean, very cheap for Indian standards. And this helps a lot of households in India which don't have access to clean drinking water through pipes and networks, etc. So a very good example of technology integration where you have solar merging with water purification. So interestingly, as in the ITA, what we found is, new products keep evolving where you have mobile phones combined with different other applications. So similar things might also be arising in the environmental field as well. I'll just skip over this slide. Finally, I'd just like to conclude with looking at saying, well, tariffs are important, but also other issues like NTBs are also relevant to consider, and hopefully at some stage in the future, members might wish to look much more closely at the various NTBs that affect clean energy and renewable technology goods and other environmental goods. Let me end here now. Thanks a lot.
Thank you very much, Mahesh. I'm sorry for rushing you, but we have a full agenda. So this was a very rich presentation, lots of figures and lots of products that at least I have no idea what they are. Are there any questions for clarification right now? We will have a little discussion towards the end of the session, but if there's anything that needs immediate clarification, then please raise your flag, raise your hand. Okay. In that case, I think we will move on to next presentation. So next presentation will be given by Amy Porges. Amy is a trade lawyer, well known to many of you. She's based in Washington, and we work closely with Amy on these issues. And we have asked Amy to speak a bit about the sort of a broader perspective. As you know, there are other obstacles to trade than tariffs. And so Amy is going to speak about emerging barriers to clean energy technologies. Amy, if you can please try to stick to 15 minutes or so.
Oh, yes. So let's start with a very, is this on? Okay. Yes? Yes. Okay, let's start with a very gloomy slide. And that's a very gloomy slide of climate change happening, huge amounts of particulates in the air. The life that faces the life to come, and except that since 1995 there have been UN climate change conferences debating this tremendously important problem, climate change. There's by now widespread acceptance that the world is facing a crisis and that carbon emissions cause climate change, which is causing and will cause damage to the planet and to the world economy. And you're seeing the consequences. You're seeing sea level rise. You're seeing glaciers melting in Switzerland and elsewhere. Increased incidence of dramatic weather, hurricanes, drought, things that are beginning to affect actually agriculture and trade. But unfortunately, the climate change conferences can't agree on how to restrict carbon emissions. So some in the climate change community, of course, would like to blame the trade rules for their inability to reach an agreement, but these issues are difficult because, for one thing, the well-known connection between carbon emissions and fossil fuels and the fear that reducing use of fossil fuels by taxing or restricting carbon would affect the cost structure of energy-using industries. We're going to have the Council of the Parties, what is the Convention of the Parties? COP20 in Lima later this year, COP21 is approaching in 2015 in Paris, but will there be an ability to reach an agreement? Well, this is a picture of what you can see is this is actually an array of solar panels in the Thar Desert in Rajasthan in India. It's a slide from Sunborn Industry, Sunborn Energy, company whose managing director is one of our experts at ICTSD. So how do we break out of this loop? Reducing the cost of non-fossil fuels, of clean energy, to the level where renewable energy is cheaper than fossil fuels when it goes into the grid. That's the dream of grid parity. So if we can get to grid parity, clean energy can outcompete coal, economies then switch away from fossil fuels for most of their power needs for industry, or even all of their needs if they have enough baseload energy sources, clean baseload energy sources like hydropower. If we can get to grid parity, this reduces the cost for governments of agreeing to limit carbon emissions. That's the connection to climate. And then once we're at grid parity, we can make it opens up new possibilities to collaborate in attacking climate change. So what do I mean by, okay, here is one of those Bloomberg slides. It's similar to it. The data, in fact, are from Bloomberg, and the graph shows that as of 2013, in a number of countries, solar power had reached socket parity. That's the point where a household can make a 5% better return on investment in a photovoltaic system by using the energy generated to replace their household energy consumption. In other words, it's cheaper when socket parity is reached. Rooftop solar power is cheaper than buying fossil fuel power from your utility company. So 50 years ago, solar power was an exotic technology for technology institutes, and it still, in some quarters, has a reputation as something exotic for hobbyists or geeks. But solar systems have now been operating connected to grids for 20 years. Solar has shown that it can fully reach competitiveness with fossil fuels, as you heard at great length from Michael Liebreich. So in Italy and Spain, Germany, Australia, and some other countries you see, they've reached socket parity already in 2013. And countries like France, Greece, and Turkey are forecast to get there by 2015. South Africa looks pretty close. So, and you've heard also about the experience curve. This is the concept that manufacturing costs decline by a certain percentage every time that cumulative production experience doubles. Okay, according to studies by the International Energy Agency, historically, the factory price per watt of solar panels declines by 15 to 24% when cumulative production doubles. So you add to this the increasing efficiency of solar, expressed as the levelized cost of electricity per kilowatt for crystalline silicon solar panels. This cost declined by 50% from 2009 to 2012, according to Bloomberg data. So this is what's part of driving grid parity in solar. We're getting there. We're getting to the point where solar is cheaper for rooftop, and even more, it may be cheaper for the right large-scale projects. And there are situations like off-grid generation where solar is a great alternative for diesel. But even on the grid in Africa and India, solar is competitive with diesel-generated power. Okay, and the technology is also there from wind. Again, more Bloomberg figures. They found in 2011 that the best wind farms in the world were already producing power as economically as coal, gas, and nuclear generators, and that the average wind farm is going to be fully competitive by 2016. So onshore wind turbines have a 7% experience curve because of economies of scale and supply chain efficiencies. Again, what have companies been doing? They've been working really hard, not just on the technology, not just on the R&D, but also on rationalizing supply chain and procuring their inputs all around the world globally, wherever it makes sense. The experience curve, remember, is driven by cumulative production, cumulative installation. And capacity in wind has grown. Okay, global installed capacity was less than a gigawatt, 0.3 gigawatts in 1984, and now it's over 318 gigawatts at the end of 2013. Turbines are more efficient, and so the levelized cost of energy from onshore wind in Europe fell by 3/4 during that 1984 to 2011 period. So as of 2011, the cost of onshore wind was only €6 per megawatt hour more expensive than the average cost of a combined cycle gas turbine plant. In other words, if the cost of carbon emitted from the gas plant, the gas-fired plant, was included, wind was at grid parity for onshore wind in Europe 3 years ago. So this is the result of decades of hard work by researchers, engineers, and people in operations and supply chain management. This is not just the result of a temporary oversupply or a price war. This is the result of a long-term, consistent drop in the costs of clean energy technology, and it's not going to stop. We can also expect the same kind of long-term price decreases for power storage, demand management, and other energy efficiency goods. So what can trade do? Okay, this is what we can do. Our goal, remember, is grid parity with carbon fuels, a transition to a low-carbon future that will save the climate. Now, if we have trade barriers, those are obviously going to postpone or prevent grid parity. You get a nice local content requirement, grid parity is gone. Policy can either provide consistent signals to the market, or it can provide inconsistent and anti-market signals. Clean energy products require, as you've heard, a big upfront investment, but in return you get a wonderful long-term supply of power, a great cash flow back to the investors, and a benefit to the planet from free, no-carbon inputs, wind and solar. But what you need is stable and predictable market conditions. What is a tariff binding? Tariff elimination provides that kind of signal. It signals investors that the governments are supporting open markets and grid parity for clean energy. If you want to scale up energy, if you want to scale up clean energy and efficiency improvements, tariff elimination is a great step. Tariff elimination, especially broad-scale tariff elimination, that takes into account value chains, supply chains, and integration with services, that kind of tariff elimination will spread the benefits of tariff cuts for the climate and for the economy, for these very desirable industries which are drivers of job growth and technology growth. So clearly, I'll leave it to Mahesh, I'll leave it to Ricardo. The APEC list is just a starting point. Climate demands ambition from governments. It demands ambition from industry. And here's another idea. In a number of regional trade agreements, the partners to the regional trade agreements have also included a commitment that each of the partners will belong to the Information Technology Agreement. That commitment to MFN tariff cutting as part of a regional trade agreement acknowledges the central role of supply chains and of the information technology economy in the global economy and in competitiveness for all regional trade agreement partners. It's important in the information technology economy to eliminate tariffs globally because these products come from everywhere. Similarly, for the Green Goods Initiative, these products also come from anywhere. Consider an ITA-like commitment for the regional trade agreements. Yes, there are other issues. Local content requirements, which raise project costs give the wrong signals to the market, particularly raise the cost of financing. Because for one thing, they eliminate economies of scale, they make procurement of inputs enormously complicated. There are a number of examples out there where local content requirements imposed as a part of a tender for clean energy have resulted in no bids. In other words, nobody out there in the private in the private sector, if you have a local content requirement high enough, nobody's interested. So again, these are really issues for a later stage. Trade remedies as well, because I think the focus right now is on tariff elimination and, again, saving the planet. So I'll stop there.
Thank you very much, Amy. I think you illustrated very well the points made by Michael Lieberich about how trade policy can contribute, because even if we saw in Mahesh's presentation that the tariffs are not very high in all the markets, you illustrated that reducing them would actually reduce uncertainty, which was one of the factors highlighted by Michael as key for scaling up the clean energy sector. And I also would like to just highlight what you mentioned very briefly, that there is also an issue of internalizing the cost of carbon in order to reach grid parity. And I think that that's a very important element which we should not forget about. Before we move to the next speaker, any brief questions for clarification to Amy? Okay, in that case, we will move on to the last presentation in this part of the session, which will be made by my colleague Johannes Bernabe. Johannes is a senior associate with ICTSD and has specialized in services. He is also an associate with a law firm in the Philippines. So, Johannes, please, the floor is yours.
Thank you very much, Ingrid, and a pleasant morning to everyone. It would seem that with the launch of the Green Goods Initiative, there should also be some thought given to how to effectuate a full-blown scale-up of trade and investment in clean energy and, of course, environmental goods, that the complementary sector of trade and services should be included in that kind of contemplation. Very easily, one would tend to almost intuitively say that services are an integral and indispensable part of any initiative which seeks to scale up trade, particularly environmental products generally, and energy and renewable energy in particular. Now, one would think that there is a whole host, again, of services that would be absolutely necessary if we were going to have a comprehensive scale-up of clean energy trade and investments. And of course, our introductory speaker, Michael Lieberich, already made mention of a couple of these pertaining to research and development, logistics, and financing. But if I may, I'd like to invite everyone's attention to the fact that, in fact, from the very get-go, from the very start of contemplating setting up a renewable energy facility, services become an integral part of that kind of consideration. One would tend to think, of course, research and design is absolutely necessary, but to implement such design, one would also have to get involved in trying to allow for engineering services, architectural services in the design of a plant or facility, the construction of such facilities, and of course the project and management consultants who will by necessity have to be employed in such a facility. And all of these require services. Now, of course, one would tend to think that in a number of these, the local sector, the domestic sector, is very well placed to provide those services. But at the same time, again, in many of these, the local competence or the local capacity for providing those services are probably not in place, and therefore there's a great need to consider trying to liberalize, if you will, or facilitate the entry of service suppliers who will provide these much needed services. In a sense, when we talk about post-generation of energy facilities, one would tend to think that this is precisely where the kind of services that are required are probably most necessary, if you will, because you may have the power, the facility to generate the required energy, but then this would probably not get to the end user, if you will, if these are not moved by certain facilities. What are we referring to? These are the post-establishment requirements for operations and maintenance, reinsurance, transmission, distribution, and prior dispatch. Now, granting that there are indeed some cases where these are probably provided by local service suppliers, again, but the question is, if we want to be efficient and effective in being able to provide these types of energy from generation to end user, if we want to make sure that the services will move from generation to end user, we need these types of services. Now, just a very quick word on some preliminary value chain studies that we have done in the Philippines market pertaining to generation and use of renewable energy using biomass and wind power. For biomass alone, when we look at the different stages from generation to transmission to distribution, we identified at least 31 distinct services that are required in order to be able to bring the energy to the consumer. Now, in fact, we were slightly amused by the fact that after making the investment in the gasifiers, after making the investment in the boilers, which would need to process the biomass which will be converted into energy, if you look at it, everything from the very start of collecting the biomass, to processing it, to drying it, to packaging it, to transporting it, all the way to having it consumed by the end user via the transmission and distribution, all of these require services. So again, it would stand to reason that looking at the value chain analysis, for instance, for this particular facility, services have to be an integral part of any consideration. The same applies for the wind power value chain study that we conducted. After you have put up the wind turbines, after you have put up the facilities, everything that has to be invested in and everything that has to be actively pursued by the proponents pertain to services. And this would include, for instance, the simple matter of trying to ensure that operations and maintenance of that wind turbines are carried on in a very efficient manner, using, in this case, cranes, for instance, that have to be brought in and used to access 40-meter towers in order to clean and service the wind turbines that are being used. So something as simple as that shows very clearly the imperative for trying to consider services as part of any green goods initiative. Now, obviously challenges abound, and this is perhaps what is more interesting for many in the room who are negotiators, and that is the fact that there have been instances before where proposals have been made for energy services, and this have not been bifurcated between traditional energy vis-a-vis renewable energy. And even then, just looking at energy services as a whole, there have been a lot of questions regarding what is exactly covered by energy services. For those who have been covering this from a services standpoint, there is an obvious lack of reference in the W120, the present classification list being used for purposes of identifying what are energy services. Even recourse to CPC, version 2 is not very helpful in the sense that it tends to be outmoded and not updated in terms of what are exactly the energy services in the modern contemplation on the ground in terms of business reality. We get into even deeper trouble when we start looking at, for instance, what would be those which are strictly limited to renewable energy services. For instance, if we talk about transmission and distribution, can we actually bifurcate again between what is transmissible solely in terms of clean energy? Can we now make a distinction that, again, for purposes of distributing energy, we can isolate and segregate what is particular to sustainable energy and make sure that there are policies which are in place which facilitate these rather than traditional forms of energy? So that is a challenge. Now, in terms of the kind of discussions which normally take place in these halls, once you start talking about the need to have a comprehensive approach and trying to target as many of these services which are required to fully effectuate a facilitation of trade and investment in clean energy, one gets into the problem of a very wide universe of services which have to be contemplated. For instance, obviously there are certain core services pertaining to energy generation, transmission and distribution, but as we were starting to state earlier, there are a host of other services which are necessary in order to effectuate more efficiently these kinds of generation, transmission, and distribution. For instance, financing. For instance, management consultancy, engineering services, logistics, and all of these apply not just to energy or renewable energy services, but a whole host of other activities. How do we now isolate this to make sure that it is directly related and used for purposes of scaling up renewable energy usage? Are we going to see a return to the kind of hesitance that many members of the WTO had to the so-called cluster approach, wherein trying to have a wide net, if you will, of services that would fully effectuate this kind of scale-up, we get to include certain services which for many members are very difficult to liberalize simply because either these are sensitive or secondly they see that these are not really solely to be devoted to the kind of renewable energy scale-up that we are looking for. Now, in addition to those, there are certain regulatory issues which members have to overcome, and these pertain to either licensing requirements and procedures or standards. In terms of licensing requirements and procedures, again, preliminary studies that we have undertaken in specific countries show that as many as 120 signatures may be required just to be in a position to start generation of renewable energy power. Now, secondly, apart from these, in terms of standards, when we are trying to encourage foreign trade and investment in renewable energy, there are questions which relate to whether or not the kind of renewable energy products that they are bringing in meet those standards which have been established domestically. On a very realistic and pragmatic perspective, on-the-ground competence is also a challenge in terms of government agencies not having sufficient training and competence presently to try and address these kinds of issues. And again, going back to what Michael said earlier, in terms of finance and the kind of project financing that is required, finance institutions are often not equipped to look at how to vet applications for renewable energy projects. They tend to look at the kind of security and collateral requirements which normally apply to ordinary projects, not mindful of the fact that there are certain considerations in terms of trying to look at future revenues rather than just the present inventory or the kind of present physical assets that a renewable energy proponent might have, which could stand as security for project financing. So even if, for instance, there are an abundance of financing available internationally trying to be funneled through regional development banks and local development banks, once these get to the local development banks, there's a lack of sufficient competence for handling the kind of applications that are put forward by renewable energy proponents. So with all of these challenges, what are the considerations for moving forward? Well, one thought which has already been put forward in the past has been a reference paper for energy services, and perhaps it would be consistent with the advocacy to try and address climate change, to try and convert or try to make a specialized reference paper applying for renewable energy services. Now, understandably, these will bring about more questions and more challenges in terms of trying to identify what are those services which are solely inherent to renewable energy. But at the same time, there are already studies out there in terms of, for instance, what are sufficiently descriptive activities of what constitutes renewable energy services. Secondly, the kind of licensing issues, standards issues that can be considered and which must be necessarily addressed in a holistic approach in trying to scale up renewable energy. And all of these could, in fact, be used as inputs for drafting a reference paper. Now, again, there are precedents if you want to look at the General Agreement on Trade and Services. There are precedents in terms of annexes and understandings which have been appended to the GATS, which could be used as basis or as precedents for trying to move forward on this approach. Granted, it may not necessarily involve all WTO members. What might prove useful is that a core group of members, for instance, those who are involved in the Green Goods Initiative, could usefully look at these renewable energy services sectors and among themselves try to craft a reference paper which they as a critical mass of members could try to move forward on and sign on to, and then ultimately try to sell to other WTO members for agreement and ratification. More aggressively, there is the option of trying to adopt a more sectorial approach, one which recognizes the difficulty of having to segregate goods and services when trying to scale up trade and investment in this sector. Indeed, perhaps the old notions of trying to purely look at goods trade and services trade in isolation does not necessarily apply in energy services, particularly renewable energy services, because in this instance, whether you want it or not, the goods which are brought into a local host country will not move towards the end user if services are not availed of in order to facilitate their generation, operations, maintenance, transmission, and distribution. So again, to advocate that there is an integral, indispensable role that services plays in any attempt to scale up renewable energy, and that the Green Goods Initiative should hopefully consider incorporating this as it moves forward its negotiations on environmental goods. Thank you.
Thank you very much, Johannes. Yeah, I think that this presentation also illustrates very clearly some of the options that are available for addressing trade in renewable energy goods and services as well as a part of a policy package. So we are a bit behind schedule, but we still have about 15 minutes or so for discussion. No, we have even more. We have plenty of time. So now I would like to open the floor for comments, questions. Please just state your name and affiliation. I think we will take 2 or 3 comments and then we'll get back to the panel. So first I see Ron and then Alejandro. Okay, Ron, please.
Yes, hello. Ronald Steenbeck from the OECD. I have a question for Johannes Barnaby on trade and services and what could be done there. I mean, we absolutely support everything you said about the close connection and the need to do something on services, but we've been struggling with that in terms of environmental goods and services that when we looked at, for example, services associated with climate change mitigation a few years ago, we found very few barriers that were specific to those trades. There were more general barriers, like related to Mode 4 or that kind of thing. So just curious if you've found that there are specific barriers that need to be addressed, or are we really talking about just more general kind of liberalization of trade and services, and as opposed to something really targeted?
Thank you, Ron. Alejandro Jara.
Thank you very much. Congratulations on this event. I'm Alejandro Jara from King & Spalding. I have a couple of questions and a remark. I've seen that the countries, a group of 14 countries, many of them have made extensive free trade agreements with one another and with other countries who have not participated in this exercise. From that point of view, it's, of course, looking at the numbers, and my question is, have the numbers been looked at to see, for example, how much more, let's say, a country like Singapore has to do in order to liberalize trade, discounting those free trade commitments that they have made in the past bilaterally. There are countries, for example, not in this group of 14, my own country, Chile or Mexico, who have done many free trade agreements and thus have already perhaps liberalized probably more than 98% of the trade in these goods with the rest of the world. So that, to have an idea about the effort that needs to be made, it would be a good idea to have those numbers and, I say, take into account the free trade agreement's effect as well. Likewise, it would be interesting to see if there are any non-tariff measures which are applicable to the trade in these products. I'm glad that Amy mentioned local content. I think the rules in the WTO are pretty clear on this matter, and some of them are being challenged, those measures in the dispute settlement mechanism. So it's not for tomorrow, but I think it's for today and the near future to clear that up. She also mentioned trade remedies, and here we have an issue. We have seen over the last years trade remedies going back and forth affect many products which are green products. And it would be a good idea if these countries were to address this, because it makes little sense to open the markets, eliminating tariffs, while closing them with trade remedies the very next day. So there's here, I think, a huge demand for governments to be consistent in terms of their trade policy and the environmental objectives that they're trying to achieve. And finally, I'm very happy to see Johannes here and that he mentioned services. I hear very well what Ron's just said. But for example, it would not be a bad idea to have a Mode 4 commitments in terms of providing temporary movement of people who have to provide services around the production and the trade of these products. And that could be something quite self-contained. But more to the point, I think it's a good idea to identify what are the barriers that exist on those essential services for renewable energies, to catalog them and to say who does what, but also include investment restrictions, which may have also bearing. I don't know how they can be negotiated, but certainly an effort has been made in bilateral and regional trade agreements in this regard, and it would be good to have sort of an inventory of restrictions that may hamper production, may hamper trade. Thank you.
Thank you very much to both of you for those excellent questions. Do we have any other questions at this point or comments? Yes, the lady over there, please.
Thank you. I'm Lourdes Berrig from the Philippine Mission to the World Trade Organization, very much involved in the negotiations that are happening now. My first observation about the list that the APEC or the G14 in Davos came up with just struck me that we are stuck right now with our NAMA negotiations. And as a first step, I was thinking, if we try to push the NAMA negotiations, maybe we can address a lot more of the items that could come into the environmental goods. And as some of you may know, there is some allergy in this house when we talk of sectoral negotiations, because we always talk of this mandate and all. But we are making progress, I would say, and hope to be able to conclude that we're doing quite well in the ITA negotiations. And you mentioned about it, that the ITA negotiations can really help. Now, there was also a comment about, well, on goods and services, I think more and more we are seeing it. But you just can't start liberalizing your goods if there is no liberalization of services. And I think as a developing country, this is always our challenge. We have certain limitations, manpower, capacity, and all. So these are the real challenges of policymakers in the government. And this is a challenge to all the private sector people who are here and researchers. Can't we do something without the government? But I know you want stability, predictability. And I'm also glad that you start mentioning about NTMs, because it is a reality, and we see it in the work in the WTO, that NTMs now are really becoming more and more frequent. I always tell colleagues in the TBT, before you could fall asleep because nothing was happening there. But now you are just wide awake because everybody is trying to come up with technical barriers, be it in green energy, whatever kind of sector. So those are just food for thought for all of you. And thank you. This is enlightening discussion. The tariff issue, of course, is something dear to most of us here because it's something measurable. And every time I challenge some researchers who come forward, why don't you do something very concrete on non-tariff? And they said, very difficult. So, thank you.
Well, thank you very much for those questions, very relevant, and thank you for bringing more issues to the discussions here, because indeed there is a lot to talk about. Before I turn back to the panel, I would just like to mention to you that we in ICTSD, we have done research on many of these areas, and we have brought some publications which are just outside the room. So I know that it's time-consuming to read papers, but please pick one or two, and hopefully they will be of interest to you. So now I believe we had questions to all the panelists. Johannes, if you agree, maybe I'll give the floor to you first.
Thank you, Ingrid, and thanks to Ron, Alejandro, and Lourdes for those comments and questions. With respect to the kind of specific barriers that may be applicable to energy or renewable energy services, you're absolutely right that we have to do a more disciplined study in terms of inventorying all of these possible barriers which occur on the ground. But I have some data in terms of at least countries in Asia which have some barriers in terms of the transmission and distribution in terms of nationality requirements which are in place. So for instance, there are 40% caps on foreign ownership in terms of these facilities. The problem, of course, with these is that they are very capital intensive investments when you want to set up a grid which would cover all the different areas, including the remote ones which are presently off-grid, and you end up in a situation where sometimes you try to create a fuzzy situation where the investors try to use corporate layers just to hide their more than 40% ownership of investment in these types of distribution and transmission facilities. So that is one. Now, the other is in terms of what you have referred to as more general barriers insofar as several sectors are concerned, and this is absolutely right. However, the one thing which we have tried to evolve, at least in the E15 discussion on clean energy technologies, is the notion that perhaps we can have a more descriptive approach of certain services activities so that they are targeted towards renewable energy. For instance, if we're talking about project financing, it could very well be that the project financing barriers that are in place could be liberalized or relaxed insofar as these are geared towards financing for renewable energy technologies and facilities. And there are precedents for these in terms of, again, GATS annexes or understandings, which have, rather than just listing out what the service concerned is, goes into a fuller description of what these service activities would be or entail, so that it becomes more specific to that targeted area, in this case renewable energy. So again, just to address Alejandro's point, you're absolutely right in terms of Mode 4 being a barrier in terms of trying to facilitate movement for engineers, designers, project and management consultants for these renewable energy facilities, because in a lot of developing countries, these are necessarily being proposed or started up by small and medium-sized enterprises, which would need the kind of inputs from those who have a greater wealth of experience, let's say from the United States or Europe, in terms of these renewable energy technologies. So yes, that is something which has to be hopefully addressed in any green goods initiative. Thank you.
Mahesh, would you like to go next?
Thank you very much to Ron, Alejandro, and Lourdes for those comments. I'd like to pick up on the comment by Alejandro on RTAs. I think that's very important because, of course, in the analysis that we did, we haven't looked at RTAs and which RTAs these countries are members of. But I'm sure that if we go deeper into it, we would find that a lot of these products have also been liberalized under RTAs. But that's a very good suggestion, I think, that we would like to pick up on for our research, and we can try and do something useful along those lines.
I just want to thank Alejandro and Ron, and particularly Lourdes. It's wonderful to hear from you after all those years. I think the points that I would like to follow up on Johannes's point, that there's been some wonderful work done by the Swedish Board of Trade on the servicification, or servicification of trade. They have looked at a number of goods manufacturers in Sweden and broken down their operations, and they find that services are throughout the value chain. Services are essential to the value chain. So I totally support further analytic work in this area. I urge that also the delegations, that the negotiators take here and also perhaps in TISA, take a really creative approach to the limitations that are imposed by the GATS scheduling rules, which were never perfect even when they were invented. And particularly the limitations imposed by the use of the W120 list of categories, which are so outmoded. They do an active disservice to so many sectors, including this one, and cloud-based services of all sorts, and anything high-tech. So, but, okay, so again, there is more work needed. Services are really very important, but again, we need to keep focused on the goal, the primary goal of this negotiation, the deliverable of this negotiation for climate, that the big goal is, I guess, a deliverable for the for Paris, a deliverable for the climate, a concrete action to open trade in goods by eliminating tariffs as a first step toward the rest of it.
Thank you, Amy. I can feel a certain reluctance from the panelists to address the question of NTBs, but I think we will hear more about them in the following session. Should we take one last question before we move on? Question or comments? in that case, I will give the floor back to Ricardo.
Thank you, Ingrid, and thank you, Amy and Johannes and Mahesh for those excellent presentations. I think, well, the objective that we have is fairly clear to you. We would like to, as I said before, not only endorse the launch of the negotiations this morning. It's not a secret that we have been proposing basically any way forward as a way to respond to the urgency of climate change and other environmental policy objectives. In that respect, we understand the dynamics of the Doha round of negotiations. We understand other considerations that countries have to participate on these negotiations. Still, we believe that with a good reason to act now on some of these questions, you could really make a big difference here. So one of the questions that it's sort of floating in people's minds and that was entertained at the press conference this morning is the issue of definition of environmental goods. And I think that has to be sort of tackled heads on. My impression is that after so many years of having that discussion here, it's clear that we should move on a very pragmatical approach. It's clear today from the analysis that we have done of markets, of production and production capabilities, that there is, again, in the production of environmental goods as they relate to clean energy technologies, particularly great opportunities for all countries to participate in the markets that will be generated, but particularly to respond to those policy objectives on environment and climate. What we need to address urgently is strengthening markets for those goods and hopefully the services that are required right now, as well as provide the conditions, enabling conditions that foster innovation, that's further development, as well as new fields that respond to again the needs on energy, as well as the fostering of efficient production in a globalized economy. Then the global diffusion, deployment, and use of those clean energy technologies. If that's the aim of the negotiations as a first stage, I think that, again, you could probably bring minds together to generate a result that will be transformational, as I said in the beginning, and that's our hope. At ICTSD, we're happy to continue to provide support and analysis on these issues as you move forward. It was mentioned by Johannes and as well as by someone else that in the initiative that we have, looking at strengthening the global trade system, called the E15 initiative, which is familiar to several of you, there are at least 3 groups that are dealing with these issues, and they have been looking at all possible ways to, again, get some movement forward. There's a group looking specifically at clean energy technologies, where I'm happy to lead. There's a group on climate change, which is the theme leader of that group is Jim Backus, the former chairman of the appellate body of the WTO, and brings together a great set of minds looking at also responses from the trade system to climate change. And there's a third group on natural resources that will be starting work soon, co-convene in a way with a knowledge partner in the International Institute for Sustainable Development, IISD, our colleagues there, and it's looking at water, forests, as well as minerals and extractives, including fossil fuels. Through those efforts, we will be generating again more analysis and more knowledge and specific recommendations for the WTO as well as for the global trade system generally to move forward on these issues. This afternoon, what Ingrid and my colleagues have prepared for you is a session where we will be looking at challenges and opportunities of this environmental goods agreement initiative that has just been launched. We will have an interactive conversation with a number of participants from the participating governments, again from the G14. You have the agenda in front of you, but we have also invited a few analysts working from the industry side in various parts of the world to participate in that panel. We'll start that panel at 2 o'clock in this same room. Is that it? Yes, in this same room. And so we look forward to seeing you all there. And thank you for the attention this morning. The presentations, again, with the slides from Michael Liebrich as well as Mahesh Sugatan are already up on the website if you want to take a look at those slides. And we then expect you all to be back here at 2 o'clock, hopefully. Thank you.
Let me just mention that there is a light lunch which will be served in the